Welcome back. You're with us on Bazaar Morning Call, and this is Corporate Radar. So it is time to connect with the next company on our radar. MedPlus Health Services is on the radar to talk about the company's business outlook and the plans going ahead. Of course, the expansion that they're looking at as well. That's what we're going to be focusing on, as well as, of course, the growth in their pharma sales. They have given around 20% revenue guidance for the current financial year. So to talk about all this momentum, let's go across to Mr. Gangadi Madhukar Reddy, MD and CEO at MedPlus Health Services. Mr. Reddy, let's talk about that guidance. I mean, the growth that you're envisaging, 20% or just tell us so far into the second quarter, how are things shaping up and how your different verticals are performing?
Sure. As far as the growth is concerned, I think we'll probably be around the number which we have guided to. Things are, shaping up quite well. The only thing which, I'd really want to focus on right now is the fact that our private label continues to grow. And as you know, medicines are an area where private label has an almost unlimited kind of growth potential. We can talk more about this.
All right. Hi, Mr. Reddy. Good morning. Good to see you. When, MedPlus brand and private label, I think together it's around mid-teens, right, of your total mix. Could you tell us where do you see this number headed and what kind of growth number are you, targeting for the current year?
Sure. So on the private label side, if you look at the volume only, 15% of all sales today comes from MedPlus brand of pharmacies, our own products out there. Now, while, it looks fairly high and people would tend to, say that in retail, you could do a private label up to 15, 20 or 25 or max it out at some number like that. I want to point out one thing. In pharmacies, at least across the world, in places like Walgreens and CVS and all, 90% of what they sell is generic. So 90% of what they sell is actually their own, of their own make or of what they actually brand as their own product out there. The reason why, this is so high in, things like medicines is, unlike a FMCG, where a store brand can have a private label, and some people will take it because it is priced slightly lower, but a lot of the people will basically just continue to go with the brand, or at least most of the people will continue to go with the brand because they all believe that the brand would have some secret recipe, some fragrance, some kind of, a secret ingredient which makes it slightly better. On the other hand, when you come to medicines, a 650 mg paracetamol is 650 mg paracetamol. There's actually no two ways of, interpreting it. So actually speaking, brand has no, meaning at all when you come to this. You either a patented drug. If the patent is over, then everyone is allowed to make it. Anyone who has got a good factory can make it. So there's absolutely no difference from one telmisartan 40 to other telmisartan 40. So as long as, the product is made in a decent factory, people will eventually all switch. In US, it is as high as 90%. Where we are today in MedPlus is that 15% of our overall sales comes from our brand, but you have to take it as 15 on 80 because only 80% of what we sell is medicines. So you could almost say that 19% of all the medicines we sell today is our brand. And I see, us growing slowly quarter on quarter continuously.
And you told us that you provide between good morning, sir, Prashant here, 15-80% discount, right, on these compared with other labels, but still you make realizations are better. But to that point, sir, that there is no difference and you compare it to FMCG, where there is a difference. Unfortunately, there's I see it within my circle and, friends and family, even for simple products, simple medicines, many go for a brand because, it's about trust, etc. Unfortunately, that is also a big issue and it is not, I don't know if you would agree with that. Go on, yeah.
I completely agree with you, Prashant. The reason why we are having this is because, unfortunately, while we have a great regulator and everything else, not all our factories are guaranteed to produce the best quality product out there, right? Hence, you would want to pick up a product from a good company because you know that it is being made the right way. Now, earlier, before we had a chain like MedPlus, or, because we didn't have anything else, the proxy for quality would only lie with the name of the manufacturer. Now, given that we have the size, we have 4,500 stores, we are as large or if not larger than a lot of the smaller companies out there, we guarantee people and we can stand by the quality of the product. I see no reason why people will eventually not slowly shift. See, the casual purchaser, the guy who comes in out there and says, okay, I want something for my headache, cough, cold and all, is probably not really thinking too much about, taking a non-brand, because the value which he is actually paying really is not very high. So he's not really looking to, differentiate between brand and non-brand and try to save any money. But the customer who's coming in out there buying his medicines month on month and is spending anywhere between 1,500 to 3,000 rupees, for him it's a pretty large expense. He has the time. He has the time to basically look at what we, tell him and, compare it and over a period of time get conviction on it. And then go for a product like ours, because then he's basically going to get a discount of 50 to 80% discount. Pretty significant saving. And that's the reason why, we have gone from, let us say, we actually launched in the end of June in Telangana. And after that, we went across, and only in October did we actually launch across the country. In less than a year, we have actually managed to reach 15% share of our overall pharmacy medicines we sell.
Yeah. So just to complete this point, then you said that this will keep growing in a steady fashion. So what is the number that we can work with, say by end of this year, this number, which is right now about mid-teens or 19, like you described, what will it grow to? And then what does it do to your margins? Sure. The fact that these are, these drugs are still being sold at a significant discount to the prevailing market prices. I mean, how does that tie in with the profitability metrics and margins as this private label business scales up?
See, one thing to keep in mind is that the normal brands which we sell also are sold at a huge discount. So this discount is in addition to that. Normally we sell at 20%. So when my 50% basically means 30% extra. But we actually, our cost of, procuring it is much lesser than that. So there is an incremental value, let's say margin to every single private label we sell. So roughly, I would say around 0.13 or 0.12 extra percent. For every 1% of replacement by our own brand for a branded generic, we actually make around 0.13 or 0.14% extra. I expect that we can actually continue to grow, not super fast, because as you guys said, people are, it'll take a little while for this to actually register. The early adopters have already come in and slowly everyone will come. I expect, us to grow no more than 1 or 1.5% every quarter. But this is then a several quarter story or a period of, 8-10 quarters. Our 15%, which we actually have right now, should basically move to around 25-30%.
Okay, fair enough. Let's talk about the
yeah.
Okay, so just quickly before we wind up, we haven't touched on the diagnostics business, where the good news is that at the EBITDA level, you have now broken even. Just share some projections there, I mean, in terms of revenue and the scale up, and also as you look at profitability, what kind of margin would you want to see that business operate at?
While I'm happy that it is actually broken even and we're not going to be losing any money on it, it is still far from the stage where we really want it to be, honestly. The plan was that this would be a subscription model, and we needed at least 200 to 250,000 people as members. We are now at only 150. So till we get to that number, I'm not really going to do anything more, make any more investments or anything like that in this business at all. Very happy to see the growth, but I think we still need to do a little bit more on selling subscriptions to the B2B side of the market. And that is yet to come. So I don't want to, make any projections right now on that.
Okay. All right, Mr. Reddy, we'll leave it on that note. Thank you very much for joining in and giving us a sense on the business. Well, with that, let's